Good morning, everyone. First of all, I'd like to pass along my apologies from Mr. Frank Holmes, our interim CFO of HIVE Blockchain Technologies, who was to be your keynote speaker. Unfortunately, you'll have to put up with me. Frank hasn't been, as Pete had mentioned, feeling 100%, and as a result, isn't able to travel here to the conference and speak to you today. Thank you to MPWR Crypto Mining Summit 2019 and Blockchain Infrastructure Research for allowing me to fill in on short notice in Frank's place. Very short notice. I know I have some very big shoes to fill, but I'll try. As I'm doing this presentation in relatively short notice, I'll start out with a run through our corporate presentation and then touch on my experience so far since joining HIVE only 4 months ago. Unlike the other speakers on the slate today, I'm a chartered professional accountant by trade, having focused on the governance and regulatory aspects of the organizations that I've worked with over the past 20 years. So likely I have a bit of a different perspective on the cryptocurrency industry. As a governance professional, I want to start out with my normal disclosure, as most accountants and auditors do, that during today's presentation, I may be making comments containing forward-looking information, and as such, there are many risks and uncertainties that affect HIVE's performance in the future and any of our crypto mining companies. And as such, actual results may differ materially from the views expressed today. Unless otherwise indicated, please note all figures are in US pesos. HIVE's view is that blockchain is a very disruptive technology in the early innings of changing the world. We believe that there's incredible opportunity in this space, and it's grasping that opportunity which requires some vision. If we put some meat on the comparison that is drawn between a maturing internet and an early-stage blockchain ecosystem, according to Forbes, 50% of the planet, or 3.8 billion people, are using the internet, while only 0.5%, less than 50 million, have crypto wallets. Lots of room to expand. At the same time, 90% of banks are exploring blockchain. To us, at HIVE, adoption is not a question of if, but when. The most well-known blockchain use cases are Bitcoin and Ethereum. There's been tremendous growth in the number and value of cryptocurrencies over the last 5 years, but it has been undeniably volatile. It's why we believe that picking the right tokens is critical to our success, and we have focused on Ethereum and Bitcoin. As you can see, we've seen a large compression in the market cap of 2017 at $573 billion to where it is currently at around $130 billion, while the number of cryptocurrencies continues to increase year after year. It may not be a fair comparison, which I always like making, not fair comparisons, but looking back to 2014, we saw the market cap of all coins almost cut in half by the end of 2015, but then almost triple in the following year. We don't know what to expect, but sitting at $130 billion at the end of 2018, HIVE continues to be bullish on cryptocurrencies and ready for the next explosion in this space. Despite the historical notoriety of Bitcoin, currency is only one use, as we all know, of blockchain technology. As you can see, major companies are looking and locking into this and making their moves. Fortune 500 companies are investing in the technology. And as you can see here, there's a great quote from Ginny Rometty, the current chair, president, and CEO of IBM, who said, "What the internet did for communications, blockchain will do for trusted transactions." As a result of that, IBM now invests more than $200 million per year with 1,000 employees assigned specifically to blockchain projects. Just after the financial crisis, a number of disruptive companies emerged. In less than a decade, Uber, who was founded in 2009, and Airbnb in 2008, are household names now. Blockchain is enabling new competitors, and while I'm sure this audience is different than the layman outside, the majority of those people have not likely heard of Chaser or B token, but those same people likely hadn't heard of Uber or Airbnb as little as 5 years ago. Blockchain technology is enabling the next disruptors. At HIVE, we believe that blockchain is Web 3.0. The adoption of blockchain comes from the strength of the immutable ledger. Implementation will be powered by blockchain experts with experience in building and securing the blockchain. At HIVE, we are building an elite, powerful, and dominant blockchain company. Mining is only the start, but blockchain is the future. Cryptocurrency miners are building the backbone of blockchain. HIVE has the scale, experience, and capital, we believe, that are critical skills for moving forward in the evolution of blockchain. We at HIVE are able to do this because of our partnership with Genesis Mining. As many of you are likely aware, Genesis is the world's leading hash power provider and is a significant owner of HIVE. The history of Genesis is on the slide here, but in brief, lost my slides. I must have pressed something. All right. Oh, you guys have them up here. All right, I'll go without my monitor. That's fine. The history of Genesis is here, but in brief, the Genesis principles have been investing in cryptocurrency since 2013 and began building facilities in 2015. Our exclusive partnership that we entered into in 2017 enabled us to be the first industrial-scale publicly listed miner. Genesis has developed proprietary monitoring and management systems. Genesis HIVE is the system that enables us to realize greater than 25% improved efficiency over our competitors. While the Genesis HIVE system is put in industrial rigor behind our mining hardware. We at HIVE can monitor and tune individual machines to adjust for temperature, power consumption on a real-time basis. And as with industrial deployments in other sectors, management of the hardware can be performed centrally, which improves uptime and resolves any potential IT issues rapidly and cost-effectively. Today, we at HIVE earn our revenue from rewards from validating the blockchain and transaction fees. Our profitability is a function of coin price, power costs, and network factors. We operate in low power cost, cold climate jurisdictions with fast connectivity like Iceland and Sweden. We can't control what happens on the network, but we believe that as an industry, we are migrating from dorm room miners sitting on people's floors to industrial scale mining, which positions HIVE extremely well for the future. Because with HIVE, cash management is critical to our business, we build up our inventory and sell coins to fund our operations. A recent research report released by digital asset research company Delphi Digital last week claims that over 80% of the total circulating supply of Ethereum is held by addresses which have balances greater than 1,000 Ethereum coins. The number of such addresses is 7,572, with only 1,080 of those wallets holding greater than 10,000 Ethereum coins in them. It is in this very good company that HIVE belongs to, holding close to 60,000 Ethereum coins in inventory at the end of our last reported quarter of December 31st, 2018. As we're all aware, this slide shows some of the major events that have had positive and negative impacts on Bitcoin in 2018. In early 2018, we were aggressively deploying the capital that we raised when Bitcoin pricing was significantly higher. As regulatory events and corporate decisions, notably comments made by Facebook and banks like JP Morgan, this worked against the Bitcoin price and HIVE traded down in sympathy. However, we are now seeing some reverses in the views that some major corporations have had on cryptocurrency. If we recall quite recently, JP Morgan is headed by the man that reportedly referred to crypto as a fraud and a scam. And Facebook once banned cryptocurrency ads. Now, as usual in corporates, they do a flip of 180, and they're both throwing their support behind crypto. They couldn't leave it behind. And in the form of the JP Morgan token, which has come out recently, and Facebook is now reportedly launching a crypto token for WhatsApp in the first half of this year. Volatility remains extremely high for cryptocurrencies when compared to other markets. But volatility has come down meaningfully since September of 2018, which is a positive trend. Even though Bitcoin and Ethereum's volatility is quite high here at the end of December, both of them have dropped, with Bitcoin dropping 4% and Ethereum down 7% since the end of September, where they were both running at 22% volatility. So that's what we're up against as an industry. But we at HIVE remain bullish on the long-term value and function of cryptocurrencies and blockchain technologies, as I'm sure all of you here are, or else you wouldn't be attending this conference. In 2018, you'll see that volatility had a negative impact on the stock price. Despite us deploying over 24 megawatts of GPU capacity and adding 200 petahashes of ASIC capacity, our stock was down significantly. We believe that we delivered on our operational promises, but the impact of cryptocurrency pricing has been overshadowing these operational milestones. Statistically, with HIVE, there's been a 92% correlation of our stock price to Ethereum and to Bitcoin, which had a tough time through the majority of 2018, as we're all aware. However, with hash rates falling, which helps our margins due to unprofitable miners unplugging and dropping out. I'm pleased to say that since Q2 of our 2019 fiscal year, our stock is up 56%, which I think reflects the market realizing that we're doing what we said we would do, and there appears to be improving conditions in the cryptocurrency market. Today, HIVE operates in 2 countries. We have deployments in Sweden, which have been on time and consistently under budget. We completed our Sweden Phase 3 in April of 2018, bringing our network to 24 megawatts. Historically, we've had 100% of our mining capacity committed to Ethereum and Ethereum Classic mining. As has been highlighted, the cryptocurrency space has been extremely volatile, and over the course of 2018, Ethereum was under significant pressure. As a result of that, during the last quarter of calendar 2018, we successfully diversified our mining assets by adding 300 petahashes of ASIC capacity, which is committed to mining Bitcoin and Bitcoin-related currencies. And while we continue to sell some newly minted coins to fund operations, we do retain meaningful exposure in inventories to the cryptocurrency by holding the coins. This benefits us in a rising cryptocurrency market, which we are hoping to see moving higher and higher through 2019 and 2018. We've recently gotten to the point where we have some industry leaders leading the crypto world. It's encouraging for our industry as a whole when business leaders like Fidelity Investments Chairman and CEO Abigail Johnson back in October of last year stated that our goal is to make digitally native assets such as Bitcoin more accessible to investors. These kind of statements by some large heads within the communities is very important to our industry. And this comment, as we know, was made in connection with the launch of their cryptocurrency trading platform, which is trying to make it easier for hedge funds and others to invest in cryptocurrencies. Now, I just want to touch a little bit on my experience over the last 4 months with HIVE. I joined HIVE in November of 2018 as our CFO, and ever since it's been a baptism by fire and has been a scramble every day. The cryptocurrency industry is going through a very tough bear market right now, which I've never experienced due to its intensity and volatility. I worked through the resource mining sector in the downturns of 2008 and 2011, but I've seen nothing of this sort due to the volatility. One of the challenges that I face as a CFO since I joined is constantly trying to get our costs down. We have fixed service agreements for the operations of our mining facilities in Iceland and Sweden, which makes up over 75% of our cash costs. So I have to look, along with my team, at all the costs, whether we thought they were fixed or variable, and try to negotiate them down and trim wherever we can. Because when markets are booming, a lot of these costs can get overlooked and overshadowed by the strength of the currency prices. That's when people have, back in the early 2017 when markets were up, companies couldn't sign deals fast enough because every day they didn't sign it, they saw they were losing money. Now those contracts are being looked at a little bit differently. But now, when cryptocurrency prices are down, you can't ignore or turn a blind eye to the cost side of the business. Obviously, we can't control the cryptocurrency prices, but it makes life a lot easier if they go up a couple $1,000s in the next week. Fingers crossed. Not holding my breath, though. But the larger challenge that I found coming into this space was the education side. As a publicly traded cryptocurrency mining company and the industry as a whole, education of the corporate bodies that regulate us is important. The Canadian Public Accountancy Board, or CPAB, released a report in December of 2018 called Auditing in the Crypto Asset Sector. The CPAB is Canada's audit regulator, in essence, the auditor of the auditors, who deliver value through effective regulation and by promoting high-quality independent auditing. Their December communication highlighted their expectations in a number of challenging areas they saw, such as existence and ownership rights with cryptocurrency assets. What they're asking the auditors is to look at such things as to see if invalid transactions are recorded on the blockchain, and also if validated transactions are not recorded on the blockchain. And thirdly, if validated transactions are subsequently modified on the blockchain. These are the kind of questions that the Canadian regulator is putting to the audit firms that audit us as a public company, which we find very tough and frustrating to try to answer. The other thing they want to do is ensuring that the cryptocurrency holdings that an entity says they own, they actually do. They want to make sure that a company doesn't have a ledger wallet that they say, this is our public address, and we pass it along between all of the junior miners. We have to be able to prove to them that we have ownership of those, that they belong to us, and prove to the regulators within Canada of that. Also, they're very concerned with the revenue from crypto asset mining, making sure it's valued correctly and making sure that ownership is there also. The other thing they run into is client acceptance and considerations, which I'll touch on shortly. The items that the CPAB have identified are very important to ensure that there is oversight in this relatively new industry through our infancy. But in my opinion, it's resulting in a number of negative consequences which may not have been previously thought of. With the additional scrutiny by CPAB, the auditors are having to address a growing number of questions to them to support the work they have done to issue their audit opinions. For all the public companies out there, you know when the auditors show up, it's not a fun time. They spend a lot of time trying to document what's there, making sure that everything is right so they can issue a clean audit opinion. Now they're being challenged, as CPAB's role is, the auditor of the auditors, to go in and make sure that those companies did the right amount of work. In speaking with a number of Vancouver-based auditors, when these questions are raised from CPAB, they're having to incur hundreds of hours of time, which they're not able to pass along to their clients. So engagements that they thought were going to be profitable are now not as profitable. As a result of this additional work and the fees that are being incurred, auditors are making risk-based decisions to drop their cryptocurrency clients altogether. Since I've been in the industry for only 4 months, I know of 3 Vancouver audit firms that have made the decision to drop cryptocurrency clients completely. At this time, I'm only aware of 3 auditors within Vancouver that are currently servicing the industry. And as far as I'm aware, none of the big 4 are touching them with a 10-foot pole. So that includes Ernst & Young, Deloitte, PwC, or KPMG. They're more than happy to be service providers and provide advice to you on the tax side of things, but they're not going to touch the audit side. There's just too much uncertainty and too much risk that they're running to go into those things. The end result, as you can probably guess, it's becoming very difficult for publicly traded companies to find new auditors to represent them. No auditor, no public company. You end up being delisted. And with the increasing number of companies not being able to find auditors at all. Over the last 2 months, I've received calls from some of my colleagues asking what auditors we use, because they're going around to everybody in Vancouver trying to find auditors, and they're being turned down and having doors slammed in their faces. It's very unfortunate. With the number of audit firms being reduced, they just don't have the staff or the capacity to handle a lot of those December year ends. The advantage that HIVE has had is we've got a March year end, so we've been able to negotiate a little bit with them and say, you know, this is on a bit of your downtime, let's fill a little bit of your book and help us out on this side. So this isn't just a challenge for HIVE blockchain, it's a challenge for the industry as a whole. And until we gain some additional clarity and direction of how we are going to be audited, we will still struggle to grow within the capital markets. We need to help identify that all cryptocurrency companies are not cut from the same cloth and do not have the same associated risks. Our risks at HIVE are much different from those companies that are operating currency exchanges. For example, we don't have any anti-money laundering risks because we mine only virgin coins. On the other side, we've experienced the client side of AML concerns and frustrations when we've been working with our currency exchange partners. They've been very good and effective in selling our coins and conversion of those coins into fiat currency within the accounts that we hold with them. The problem that exists is when I want to get those fiat currencies out of their care and into my bank accounts, which we experienced quite a bit in 2018. Trying to get that fiat currency sent out from those exchanges was resulting in multiple week delays of up to 6 weeks. This happens when the wire is initiated by the cryptocurrency exchanges, and it gets into the banking system. The banking system is requiring more and more paperwork to provide the transactions are from a reliable source and haven't been coming from anti-money laundering. So even though we mine virgin coins, sell those into fiat, to be able to extract the fiat, the banking system basically shuts down the whole system. And as you might be aware, there's been a couple lawsuits within Canada against some of the Canadian banks for the slowdown that they're doing, and I believe there's some going on in the US also. Additionally, right now the words blockchain are having some negative consequences, and it's leading to anxiety for leaders within our companies. For even companies that aren't directly in the cryptocurrency space, just having mentioned cryptocurrency or blockchain in their public documents or filings is resulting in things such as directors and officers insurance being multiplied 2 or 3 times. These people aren't in the industry. All they do is mention that they might be looking into using blockchain for some of their backup, some of their support, and the insurance companies and other people are seeing that as a risk. It's a problem that we've got within the industry, and I think it's something that hopefully with more education from this infant industry, it can only lead to better relations and better understanding and more growth within the cryptocurrency space. So as we as a cryptocurrency industry are going to have to all work together, no matter which piece you are, to ensure that every opportunity we continue to educate the public on what we do so this industry, which is definitely still in its infancy, can continue to thrive in the years to come. Rick, thank you.